Good morning, traders. As we commence this week, several pivotal developments are influencing the commodities markets. Let's delve into the specifics. For the oil markets, oil prices have experienced an uptick primarily driven by robust manufacturing data from China, the world's leading crude importer. The recent data indicates the fastest expansion in factory activity in 3 months, bolstering expectations for increased fuel demand. Consequently, Brent crude has risen by 0.5% to $73.17 per barrel, while West Texas Intermediate crude has reached $70.10 per barrel. Given the positive signals from China's manufacturing sector, traders should consider long positions in crude oil futures. However, it's prudent to remain vigilant of potential volatility stemming from ongoing geopolitical tensions and trade policies. Onto metals, gold, the precious metal, has seen a modest increase yet again, supported by a weaker US dollar and uncertainties surrounding the Ukrainian peace negotiations. Spot gold has edged up by 0.3% to $2,866.19 per ounce. Iron ore futures have declined for the 6th consecutive session, reaching a 6-week low. This downturn is attributed to escalating trade tensions between the US and China, despite positive manufacturing data from China. The most traded May iron ore contract in China's Dalian Commodity Exchange closed 2.81% lower at 779.5 yen per ton. For gold, maintaining current positions could be advantageous, considering its status as a safe haven asset amid geopolitical uncertainties. In the iron ore market, traders might explore short positions or hedging strategies to mitigate risk associated with prolonged trade disputes. The global trade environment is under strain as US President Donald Trump has announced additional tariffs, including a 10% levy on Chinese imports and plans for a 25% tariff on all steel and aluminium imports starting March 4th. These measures have heightened market uncertainty and could dampen global economic growth. Traders should closely monitor policy announcements and assess their potential impacts on supply chains and commodity demand. Diversifying portfolios to include assets less sensitive to trade tensions may offer a buffer against volatility. In summary, the commodities markets are navigating a complex landscape shaped by economic indicators and geopolitical maneuvers. Staying informed and agile in strategy implementation will be essential in capitalizing on emerging opportunities while mitigating risks. I wish you all a good week this week. It's going to be an interesting one, and catch up with you next week, Monday, from Amsterdam.